As of the moment, the market is open, and Sealsq Corp, trading under the ticker LAES, is priced at $6.09, which is a staggering surge of $1.73, marking a 39.68% gain for the day. Now, when a stock jumps nearly 40% in a single session, the immediate reaction for most people using their Robinhood app is to see a momentum rocket they either need to jump on or feel like they've missed. The expectation is that this is a classic small-cap pump, a fleeting event driven by a press release that will be forgotten by next week. But the reality of what's happening with Sealsq is far more substantial and has implications that stretch years into the future, touching on the very foundation of digital security. While day traders see a volatile chart, what they're missing is the company's deep entrenchment in a sector that governments and megacorporations are beginning to pour billions into: post-quantum cryptography. This isn't just a flash in the pan, it's a tremor before a potential earthquake. The common belief about Sealsq is that it's just another small fish in the vast semiconductor ocean, competing against giants like Nvidia stock. They see it as a niche player focused on the Internet of Things, or IoT, making tiny chips for smart devices. This view isn't entirely wrong, but it's dangerously incomplete. The expectation is that its success is tied to the growth of IoT devices alone. The reality that sophisticated investors using platforms like interactive brokers trading are looking at is that Sealsq is a critical supplier of cryptographic security hardware. Their core business is creating the digital locks and keys for the connected world. More importantly, they are one of the few pure-play companies actively developing and deploying semiconductors that are resistant to attacks from quantum computers. While everyone is focused on the performance of Tesla stock or the ecosystem of Apple stock, the foundational security that will protect those very companies in the future is being built by firms like Sealsq. This 40% jump isn't just noise, it's the market slowly waking up to a threat that, until now, has felt like science fiction. Let's break down today's extraordinary price action. A move of this magnitude is almost never random. It's accompanied by a massive spike in trading volume. We're seeing volume that is multiples of its daily average, suggesting that this isn't just retail interest from those practicing self-investing. This is institutional money taking notice. When you see volume like this, you have to ask who is buying and who is selling. It's likely a mix of short sellers getting squeezed out of their positions and new, long-term funds establishing a foothold. For anyone managing their own individual brokerage account, seeing this kind of activity is a major signal. The volatility is extreme, creating huge bid-ask spreads, which can be tough for those new to online investing. It highlights the difference between a simple SoFi Invest platform and the more complex tools available on an interactive brokers platform, which are designed to handle such erratic conditions. This isn't a stable blue chip you'd find in Fidelity mutual funds. It's the wild frontier of technology investment. This move forces us to analyze whether the current financial structure of the company supports such a valuation leap. Is it based on a new contract, a government mandate, or a technological breakthrough announcement? The answer lies in the company's recent filings and its strategic positioning. Diving into the company itself, Sealsq is a spin-off from WISeKey, a veteran in the cybersecurity and IoT space. They are headquartered in Switzerland, giving them a unique position in the global landscape of data privacy and security standards. Their main products are microcontrollers and secure elements, essentially tiny, fortified computer chips designed to provide cryptographic functions for other devices. Think about every smart coffee maker, connected car, or medical sensor. Each one needs a way to prove its identity and secure its data. Sealsq provides that root of trust. Their business model is straightforward. They design and sell these high-margin security chips to a wide range of manufacturers. While the company's past performance has been steady but not spectacular, its valuation was traditionally based on the linear growth of the IoT market. However, older reports don't factor in the coming quantum disruption. A Fidelity brokerage report from a year ago might classify LAES as a speculative semiconductor play. Today, that classification is obsolete. The Fidelity mobile app might show you the price spike, but it won't tell you the story behind why that spike is more than just a momentary blip. This is where investment help becomes critical, understanding the technological shift that underpins the stock's movement. So, what is the future outlook? This is where the expectation of a quick trade collides with the reality of a long-term thesis. The single biggest catalyst for Sealsq is the global migration to post-quantum cryptography. Quantum computers, which are becoming more powerful, will one day be able to break most of the encryption we use today. This would be catastrophic, rendering everything from bank accounts to state secrets vulnerable. In response, the U.S. government, through agencies like NIST, has already standardized new PQC algorithms. Soon, there will be mandates for government contractors and critical infrastructure to adopt this new quantum-resistant hardware. Sealsq is one of the few companies already producing semiconductors that meet these emerging standards. This creates a massive, non-negotiable addressable market. This isn't an optional upgrade. It's a mandatory global security overhaul. For those using investing sites to find long-term growth stories, this is a compelling narrative. The risk, however, is significant. The timeline for mass adoption is uncertain, and larger competitors could eventually enter the space. A diversified approach, perhaps through Fidelity ETFs focused on cybersecurity, could mitigate some of this single stock risk. Or, a sophisticated investor might use interactive brokers tools to manage a position over time. Comment below with your thoughts. Do you think the quantum threat is something investors should be positioning for today, or is it still too far into the future? The opportunity here is to invest in the foundational layer of next-generation security. While others are chasing the application layer, the hot new software or AI model, Sealsq is providing the hardware that will make it all secure. For investors who got into NVIDIA stock early, recognizing it was more than just a gaming chip company, this might feel familiar. It's about seeing the broader application of a core technology. Whether you're using Fidelity investments for your retirement or Robinhood investments for more active trading, understanding this dynamic is key. The current platforms for online investment, from SoFi stocks to Schwab Intelligent Portfolios, are all built on the assumption of secure digital infrastructure. Sealsq is one of the companies ensuring that infrastructure remains secure for decades to come. In summary, the market's expectation today sees Sealsq's 40% surge as an ephemeral, high-risk momentum play. The reality is that this price movement is an early signal of a much larger, fundamental shift in the global security landscape. The world will be forced to upgrade its cryptographic infrastructure to defend against quantum computers, and Sealsq is positioned as a key supplier for that transition. The disconnect between the short-term trading view and the long-term technological imperative is where the real story is. This isn't just about a stock price going up, it's about a company building the secure foundation for the next chapter of the digital world. The volatility is simply the price of admission for an opportunity rooted in a foundational technological need. Disclaimer: this content is for educational and informational purposes only. It is not financial or investment advice. Please do your own research or consult a licensed financial advisor before making any investment decisions. Don't forget to like, comment, and share. Subscribe for more finance updates and market insights. This is for education and entertainment only. Invest at your own risk. Like, comment, follow for more finance.